This approach works because it combines three key elements: trading in line with the trend, taking entries from strong supply and demand zones, and using lower time frame confirmation for precision. Now, let me show you how this works directly on the price chart. In the first step, we identify the market direction by marking breakouts and changes of character, or BOS and CHOCH. These can easily be drawn manually using simple trend lines and labels to visualize structure shifts on the chart. Start by marking each break of structure that confirms trend continuation and each change of character that signals a possible reversal. These two elements form the foundation of market structure analysis. In this example, we can see the price breaking structures to the upside on the 30-minute chart. That means we're in an uptrend and should focus only on buying opportunities. Next, let's talk about fair value gaps. These are imbalances on the chart, zones where price moved so quickly that it left a gap between candles, creating an area of inefficiency. The market often returns to fill these gaps as it seeks balance. We'll use these manually marked gaps as key zones of interest, expecting possible price reactions when price revisits them. First, wait for the price to trade back into the gap, then move to the lower time frame to look for confirmation signals before entering a buy position. So, let's switch to the 5-minute chart. On this lower time frame, the goal is to spot signs of a possible reversal. One strong clue is a bullish liquidity grab, when price briefly wicks below a previous swing low before reversing upward. This move shows where stop losses were triggered, followed by a sharp reaction in the opposite direction. Liquidity grabs often occur near key zones like fair value gaps and can serve as powerful entry confirmations. When this move also breaks a recent bearish structure on the lower time frame, it gives us extra confirmation. In other words, it forms a change of character. Now it's time to execute the trade. Place your stop loss just below the low of the liquidity grab and set your target at the next key level identified on the higher time frame. So if you're ready to deepen your market knowledge, sharpen your trading edge, and start making smarter investment decisions, don't miss the full video on our channel. Watch now.